Hey guys, welcome back to Overture 1, and you already know the drill. Before you see the value, before you see what we're going to be talking about today, make sure to comment, like, and subscribe, guys, because that's important to us at the end of the day. You know, it's important to you and it's important to us. If we do a good job, like and comment the video. It's nothing but a little click. It's the same thing that you click on MT4 to make a trade. It's the same thing that you could click on your computer at the end of the day. So it's that simple. Share the show, guys. Share the channel. We appreciate you guys, and we will get started right now.
So this week what we're going to be talking about is it's kind of like a buzzword now in trading. It's something that we've been implementing, following for the past 3 years now, and it's called smart money concepts or smart money trading. And a lot of you guys are probably wondering, like, what is smart money concept or smart money trading? And to give you guys the theory that it's based off of, right, is that the financial markets that we participate in, right, being currency market, forex, index futures, which is like major players like Dow Jones, NASDAQ, S&P, right, and also commodities markets are not like this free market that they're promoted to be. Rather, that the price within the market is actually controlled via a banking system called the central bank, and it is algorithmically styled price delivery into the market. And I know that's a lot to digest, but that's pretty much what the definition of it actually means, the theory behind the definition. And our goal as smart money traders, which is what you would call it, or smart money concept traders, however you want to refer to it, is we're looking to build a trading plan around a model that will mimic the direction that the bank is desiring price to go.
And guys, we want to give you a breakdown exactly why we trade it, like what caught us into, like what actually geared us to trade smart money. Like me and Jerry were very, very similar. We traded trend lines, wedges, cheese wedges, like blue cheese, all those things.
Green Bay Packers.
Exactly. So we traded all those things, and like we gave it some good amount of time, but like we would always keep getting clapped at the end of the day. Like we just keep losing. Like it wouldn't make sense. The R&R was never there. It would just never like click. It never really made sense. It's like most people, you can't duplicate trend lines because everybody will put their stop loss in a very much different place and their targets would be at a different level. So it really wouldn't make sense for us. So how I came across this was the way that I was explained, and that's success leaves clues. Like usually how Jared just described it to you, right? Smart money trading. Who are the big players in the game? It's not the best IG Instagram trader that you know. It's those people that you don't even know. So it was, for us, it was the central banks. It's like, who are the big boys? Well, technically, if they trade all our money that's in our bank account right now, they're our big boys because it's not even their money. They're just trading our money at the end of the day. So if they're the big boys and they're the ones that really control the market, so it's like, why would I try to reinvent a wheel and try to form something new, a new strategy? I made like this trend line with this cheese wedge, like this, like it wouldn't make sense. I'm not knocking it at the end of the day. If it works for a lot of people. It's great, but to me, it just didn't make a whole ton of sense. Like things did not like click together. And it was just like, all right, so when I started learning the concepts, they all kind of made sense. They were like a dictionary definition of like, this is what it is, and go back test it because it's multiple. It's literally always there in the market. So it really just made sense. You know, the way that everything was explained and the way that the banks do it, like if they're the big players in the game, I'm gonna go follow them. I'm not really gonna do that much hard work. I'm just gonna do my work to learn it, train my eyes, and gear a plan towards my favor so I could actually be a consistently profitable trader in the market.
100%. And the second point that I want to jump into as to why we trade smart money is because there is a real-time decision that you can make based on logic as to why you're going to enter the market for a buy or why you're going to enter the market for a sell. And what do I mean by a real-time decision? I'm saying that most of the indicators that you use right now are what are called lagging indicators. It means that they're taking price data from the past and they're trying to build a model off of previous data that's going to predict future data, which is not, I'm just telling you, that's not how the market works. right? Easiest example is like a moving average. You know, all these moving averages have a number, right? You have like the 200 moving average, and it's averaging past 200 candles, and it's trying to build you like this slope of like what price is doing right now. Okay, so it's gathering past data, and it's trying to say, hey, look, this is what's going to happen in the future, where we're not living in the past with our trading. We're focusing on what's happening right now. How can I execute based on where price is being delivered to now, right? Where is it going? So that's a very, very big point for us. The continuation of this point is not just lagging indicators. We're also not basing it off of just like these obscure chart patterns, right? Which I want like a graphic to pop up on the screen right here of, if you go on Google right now and you search trading chart patterns, all of the top searches for trading chart patterns, they're not going to be on an actual chart. Somebody made a computer drawing, Canva drawing of candlesticks that aren't real, or wedges that are made up bars with lines on them, and they put together this book or this pamphlet, this informational, and it's, dude, I've searched it so many times just to show people, if you scroll through all of these, they are just made up, animated chart patterns that somebody put in a book to sell you guys. They're not real. You might see some of them like exhibit themselves in the market, but the basis of them, like where people are showing you them from, is not from actual price data. What we're trying to explain to you is that there's a system out there that we teach on where we can show you actual live price data that has algorithmic precision entries and exits, and we can give you 5 to 7 reasons why every single trade played out, right? You're not gonna get that by saying, hey, look, I bought a trend line or it fell out of my wedge. You know what I mean? And like what we're trying to say is, we're not trying to knock it. I'm just trying to open your eyes to a new concept that, I mean, it's not new, it's what the banks are doing, but it's newer to the trading space of, hey, look, a lot of what's been put out there is based on either just like these constructed ideas or previous price data, and there's a way that you guys can actually trade that's based on what's going on right now and where price is being delivered to.
The last point, the third point that we're going to talk about today on why we actually like to trade smart money, why it makes so much sense to us, it's the contrarian approach. Everything that I explained in the beginning, in the first point, basically ties into the third point. You know, like, guys, like if Jared literally just explained point 3, we both explained point 3 in point 1 and 2. So like, yeah. just think about it. It's like, guys, if you see all these patterns, and majority of traders are not profitable. 96% of traders are not profitable at the end of the day because they quit within 2 years, and it's just, as time goes on, they keep quitting. It's like year 1, like probably 50% quit. Year 2, if they make it that far, 96% quit. Like, I'm not giving you real statistics. I'm just saying that's just majority of the field. Go find traders that have been in the game for 5 and 6 years, and majority of the time, you know, if they've been in that long, they're pretty profitable. They stayed, they endured, they took losses, they won, and they figured out a plan that works for them. You won't seldom see like people who are consistently losing for 5 years. Like, bro, you would need some help at least year 3, bro, or like year 2, you know? So really, I would just take the contrarian approach to trading. So if everybody's using rising wedges and trend lines, what works for us is smart money. If the big boys are making trillions of dollars, well, why can't I follow them? I'm not saying that I'm gonna make $1 trillion, but I'm pretty sure that you can make a really good amount, as opposed to like your favorite IG trader and everything so far, which is, I'm not bashing them or anything. They have a good skill set, they're profitable, that's phenomenal. But like, who's the real big boys in the game who really could manipulate the market in whatever way they want? It's the banks, it's the central banks.
100%. So there you have it. That's our 3 reasons why we use smart money trading, and also an introduction. If you didn't know what it was, we hope that you guys have a clear understanding of what actually smart money trading is. And like we said in the beginning of the video, like, comment, subscribe. We actually recently released a technical analysis they don't want you to know about course, which teaches all about how the banks actually move money through the markets. So if you guys are interested in that, you can check it out in the description box down below. And yeah, with that being said, we will see you guys in next week's video.